Sydney, and I'm the, okay, hold that, oops, all right, yeah. A very good evening to all of you. My name is Sydney, and I'm the Executive Director of CFA Society Malaysia. A very warm welcome to today's virtual session, Sustainable Finance in ASEAN 2023. Firstly, I would like to quickly touch on the housekeeping bit. This session will take about 60 minutes, including discussion and Q&A session. Please ensure your mics are on mute throughout the session. As this will be a recorded session, the recording will be made available to you and also at our society's YouTube channel after the event. In addition, please take note that we do welcome comments and questions via the comment chat box, so please do ask away. The agenda for the session today would be an overview of CFA Institute and CFA Society Malaysia. And then I will pass on to our guest speaker who will be speaking on the overview and development of climate and sustainable finance in Malaysia and ASEAN. He will continue with what to expect in 2023 in Malaysia and ASEAN. And the guest speaker will be Mr. Wong Chi Xiang, which I will introduce shortly to you after this. We will continue with discussion and Q&A with our moderator, Bobby Lee. So let me introduce now to all our speakers for today. It is with my pleasure to introduce you, the guest speaker, Mr. Wong Chi Xiang, CFA, Senior ASEAN Analyst for Climate Bonds Initiative. His experience in developing ESG strategies, policies, and initiatives at Securities Commission Malaysia. He is also the former investment analyst at SOXO, and Chi Xiang graduated with a Bachelor of Science in Accounting and Finance from the University of Warwick. So the moderator today with Chi Xiang is one of our directors, Bobby Lee Chia Yih, CFA, one of the directors of CFA Society Malaysia. He is the former capital market manager at EPF Malaysia. He's also experienced in risk management from his previous role at RHB Investment Bank, Ernst & Young, and M-Bank. He graduated with a bachelor's degree in electronic engineering and an MBA in finance from Multimedia University. In addition, Bobby is also a certified financial risk manager by the Global Association of Risk Professionals and a chartered and alternative investment analyst by the Chartered Alternative Investment Analyst Association. Okay, now I will just quickly run through an overview of CFA Institute and CFA Society Malaysia. So if you don't already know, CFA Institute is the global non-for-profit association for investment professionals that sets the standards for professional excellence for 76 years. Its mission is to lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence for the ultimate benefit of society. It has a very large global network and connectivity since 1947, where we have about over 190,000 CFA charter holders, to which over 25,000 firms employ these charter holders. They also have 650 affiliated universities around the world, 160 plus CFA societies worldwide, where Society Malaysia is one of them. And its programs are recognized by 60 plus regulators in 40 plus markets worldwide. Where Society Malaysia is concerned, our vision is to foster an investment community that is based on trust, ethics, and sustainable practices that is valued by the society. Our mission is very aligned to CFA Institute to be achieved through the four key pillars: operational excellence, develop future professionals, deliver member value, and to also build market integrity. So just like on a global scale, where the local network is concerned, we also have a large network and connectivity, whereby in Malaysia right now, we have about 900 plus CFA charter holders, to which 250 firms employ these charter holders. We also have this year onwards, we have 20 recognized employer partners, where 12 of them are the recognized ones and 8 out of the 20 are premium employer partners. We have currently about 2,000 CFA program candidates that is embarking their journey to take the program. And we have 16 affiliated universities. Now, this is the part where you guys are all waiting for. I shall now pass the baton or the mic over to Chi Xiang. Over to you, Chi Xiang.
Right, thank you, Sydney. So good evening, everyone. So yeah, my name is Chi Xiang. Like Sini mentioned earlier, so currently with Climate Bonds Initiative, part of the ASEAN team. So if I could move to the next slide. So the presentation today would be just basically an overview about the climate and sustainable finance in Malaysia and also in the region, given that part of my portfolio is to cover the Southeast Asia region. Just to give a bit of flavor about what's happening, the developments in 2022, and perhaps a bit of the expectations for the upcoming year in 2023. So this slide is basically an overview about green and sustainable finance. So sustainable finance takes consideration 4 aspects. So environmental, social, economic, and governance. So you may usually hear about ESG, which cover environmental, social, and corporate governance. So economic, and it's an aspect that, especially in finance, it's of increasing sort of importance and focus, whether economically it makes sense in terms of, let's say, integrating or adopting ESG or sustainability considerations within financing or investment decisions. So in terms of the environmental pillar, you may see in this chart, climate change mitigation, adaptation will be the 2 main component, if I could say. Social economic would come in, take into consideration working conditions, including slavery and child labor, local communities, conflict, humanitarian crisis, health and safety, employee relations, and diversity. As for governance, so these are the common corporate governance issues or matters that we usually see, such as executive pay, bribery and corruption, board diversity and structure, fair tax strategy. So these are usually, in terms of governance, before ESG has emerged as a sort of a talk of the town. I think governance has always been a focus, especially by SC through its MCCG, the Malaysian Code on Corporate Governance, and other relevant instruments. So the bottom part would be on the definition of sustainable finance, which comes about low carbon, climate, green, social, environmental, and sustainable is more of the entire gamut or ambit of the climate finance. Next slide, please. So this is basically why green finance. I think we commonly hear a lot of people asking these days why they need to consider green or climate finance. So IPCC, the Intergovernmental Panel on Climate Change, sets a target of 50% cut in global emissions in the next 10 years. And $5 to $7 trillion per annum of investment is required to transit from a high carbon to low carbon economy. So the current or the existing gap of decarbonization rate outlined in the Paris Agreement is currently at 7.6% and keeps growing. So climate finance commitment of $100 billion under UNFCCC, the United Nations Framework Convention on Climate Change, from developed to developing nations have not been delivered, although it has been sort of promised in some ways by developed markets. Annual adaptation costs in low and middle income countries are estimated to climb to $300 billion by 2030. So in Southeast Asia is seen as very vulnerable area, it's part of the emerging markets. So $200 billion per year for climate infrastructure investment is needed to achieve the 2030 targets. And in this sort of situation, public finance or financed by governments alone cannot cover this, and will need global private capital to be mobilized to adhere to these commitments. So this brings us to the sort of a part of sustainable finance that probably I would like to highlight, since I'm from Climate Bonds Initiative. It will be on green bonds. So we normally call it these days GSS plus bonds: green, social, sustainable, and plus means other relevant instruments such as blue bonds, transition bonds, and so on. So these instruments are a critical way of catalyzing such financial needs quickly, and to a portfolio of projects rather than project by project as to meet the scale of needs. Next slide, please. So this chart, a chart that basically I took from McKinsey report, which was published last year. So IPCC identified around 5 to 7 trillion. So McKinsey did a research basically, and McKinsey Global Institute identified probably around $9.2 trillion of spending would be required in order to achieve the net zero scenario, which is being broken down to 3.5 trillion new spending, and the others would be current spending or commitments required to transition or to move from high to low emission assets. Next slide, please. So this one is basically to depict or illustrate how much do we need in terms of finances and from where. So the UNFCCC Executive Secretary previously, Christiana Figueres, mentioned that all infrastructure has to now be green, and rivers of capital need to flow to assets and projects that are right ones for the 2050 world we have to build. And this is also aligned to the demand basically from the institutional investor space. So there's this global investor statement that has been issued either annually or biannually, depending on the scale, coordinated by a few sort of climate-aligned investor groupings. So you can see AIGCC, the Asian Investor Group on Climate Change, CDP, Climate Disclosure Project, IGCC, UNPRI, Principles for Responsible Investment, and UNPFI. So the recent one was issued in 2022, signed by 532 investors, representing over $39 trillion in assets, basically reinforcing the need for more supply of such green and sustainable finance assets. Next slide, please. So GSS bonds. So what are GSS bonds? So green bonds basically enable capital raising and investment for new and existing projects with environmental benefits. So it's basically bonds tagged to green assets. Whereas as for social bonds, use of proceeds bonds that raise funds for new and existing projects with positive social outcomes. So basically linked to the social considerations or welfare or factors. And for sustainability bonds, are bonds where the proceeds will be exclusively applied to finance or refinance a combination of both green and social projects. So it can be channeled to, if a sustainable bond is being issued, can be channeled to either green or social projects, depending on the structure and the financing needs. And all these three bonds have also been issued in Malaysia so far. Next slide, please. So this chart is basically to depict the overall sustainable debt finance landscape, because I think we comment when we speak about green finance, debt sustainable finance, people will ask the questions, where does it come? Which part does it form? So climate finance would basically be a subset of green finance, and green finance, as named green, probably is more towards the environmental component. So it will be a subset of sustainable finance, which covers social, SDG, sustainable, and so on. And then the debt finance would cover the sustainable debt sort of landscape, plus, as we commonly known in terms of conventional bonds, vanilla bonds, and vanilla loans. Next slide, please. So earlier on, it was more of a 101, because I think why the reason of this webinar is to basically give a teaser to those that is interested to find out about sustainable finance. So this slide, like I mentioned earlier, I will be giving more an update or development, a review on what happened last year regionally. So the three documents was issued were issued by the ASEAN Capital Market Forum. So ASEAN Capital Market Forum is basically a group of ASEAN capital market regulators. So in the SC would be represented by Securities Commission Malaysia. In Malaysia, sorry, would be represented by Securities Commission Malaysia. And then there's SEC Thailand, SEC Philippines, and so on and so forth. So last year they issued, end of last year, they issued the ASEAN Sustainable Fund, Responsible Fund Standards, and also the ASEAN Sustainability Linked Bond Standards. So sustainable and responsible fund standards. So that's basically a disclosure guide to provide basically a disclosure guide for, let's say, issuers, SRI fund issuers or sustainable fund issuers that they seek to qualify under this. So what are the minimum disclosures and reporting requirements they should provide? Whereas for the sustainability linked bond standards, it also serves as a guide to facilitate more sustainability linked bonds. So this is a different type of instrument compared to the GSS bonds that was discussed earlier. So sustainability linked bonds are for general financing purpose. So the proceeds will not be, it can be used for general working purposes. Whereas for use of proceeds bond, like the GSS bonds discussed earlier, it would have been tagged to specific activities. If it's green, then it could be used for green assets that is being issued, tagged under. So these two documents and also the ASEAN SDG bond supplement toolkit. So basically this is just to complement the ASEAN SDG bond toolkit that was issued, I think a year or two ago. So it gives a more breakdown in terms of respective ASEAN member states, let's say Malaysia and Philippines and Thailand, what are the regulatory and legal requirements for them to issue a sustainable bond. So in terms of other key initiatives in the region, all in all, transition has picked up the interest on transition. So the Energy Transition Mechanism, ETM, or probably you have heard of the Just Energy Transition Partnership, happening in Indonesia, in Philippines, in Cambodia, and so on. So that has been used as a way that developed markets are sort of realizing their commitment in channeling the funds for energy transition initiatives, and also via the multilateral development banks. And also on the entity level transition plans. So this would link more towards the transition initiatives or commitment at entity level, at company level. So what they do to demonstrate to perhaps investors or regulators that they are moving towards a greener pasture. So in terms of national green or sustainable finance taxonomies, last year we can see that Indonesia, Singapore, Thailand, and Vietnam have been sort of ramping up the efforts to sort of publish their taxonomies. So in Indonesia per se, they have published a first edition of their taxonomy. Singapore has launched 2 public consultations last year, and they just launched a 3rd one this year. Thailand has also launched their first draft focusing on energy and transportation sector for public consultation. Vietnam also had a more focused group sessions, and also they have submitted it to the ministerial levels for approval at the moment. So for disclosure rules for listed companies, I think you can see that in Singapore, in Malaysia, especially in terms of the Bursa's revised sustainability reporting requirements. Whereas for disclosure requirements of ESG funds and instruments, so one of the example which I would talk a bit more later in my next slide is the one by Malaysia for guidelines on SRI funds, basically disclosure requirements for sustainable and responsible investment funds in Malaysia, alongside which is also sort of issued in tandem to that of the ASEAN Sustainable and Responsible Fund Standards. Next slide, please. So this one is basically, I try to cover as many as possible initiatives, but these are the ones that I think you've probably seen in the news that has been captured especially by the financial sector that I'm covering here, developments in Malaysia. So by SC, by Bank Negara, by Ministry of Finance, and also by Bursa. So one of it would be the SRI taxonomy for Malaysian capital market that was issued by Securities Commission Malaysia last year, end of last year. So a taxonomy, I did not provide more of a further elaboration earlier. It's basically a set of, it defines what activities are considered green, basically. So if you could put it in layman terms, probably is a dictionary of how activities are being considered green. So SC issued an SRI taxonomy for the Malaysian capital market. There's another set of taxonomy issued by Bank Negara Malaysia, which is called the Climate Change and Principles-Based Taxonomy, CCPT. So that's for Bank Negara's regulators. And then there's a few initiatives by the Joint Committee on Climate Change, which is basically the platform set up by Bank Negara and SC, and members would represent throughout the financial sector in Malaysia, basically to coordinate approaches or initiatives to accelerate the climate ability and the resilience of the financial sector. So last year they issued the climate data catalog. You can see over here. So it's a key initiative on one of the subgroups of the JC3, and also the TCFD application guide for financial institutions in Malaysia. So basically, it provides acts as a guide, and also it has case studies on how financial institutions can incorporate or demonstrate their alignment to TCFD, which is a task force for climate-related financial disclosures. So the other two documents on the right that you see, one is the Principles on Good Governance for GLICs, for GLICs. Another is the Malaysian Code for Institutional Investors. So these two documents are basically by Ministry of Finance, and also the document on the right is by the Institutional Investors Council. So the MCII, Malaysian Code for Institutional Investors, basically address the stewardship, whereas the Principles on Good Governance are tailored towards the governance of the GLICs, but they have both incorporated sustainability sort of criteria or commitment and requirements that needs to be adhered by either the GLICs or the institutional investors. So other initiatives happened in Malaysia last year include the Bursa Carbon Exchange, which is the voluntary carbon market, or probably you've heard of carbon offsets. So that was launched by Bursa last year. Revised Sustainability Reporting Framework also by Bursa Malaysia for public listed companies. So SC also issued a guidance note on managing ESG risk for fund management companies. So this is an extension, if you could say, more of the guidelines on compliance for fund management companies. So this guidance note will be focusing on outlining what are SC's expectations for fund management companies in managing their ESG risk. And then there's this SRI-linked Sukuk framework. So if you recall early on, we talked about the sustainability-linked bonds, SLBs. So this is a sustainability-linked Sukuk framework that was issued by SC, basically to encourage issuance of sustainability-linked Sukuk as a means of financing for company to transition. And then there's the revised guidelines on SRI funds. So the guidelines on SRI funds sets out the disclosure requirements for funds to be considered SRI in Malaysia. So this is also by SC. And then there's a few initiatives on the right, bullet points, LCTF, Low Carbon Transition Facility. So it's a 2 billion ringgit facility by Bank Negara to assist SMEs, in fact, to support SMEs to transition and to adopt sustainable practices. So the Climate Risk Management and Scenario Analysis Policy Document, this is also a policy document for Bank Negara's regulators to basically adopt in considering or managing climate risk. And then there's the GVC program, Greening Value Chain Program. So this is a program launched by, also introduced by Bank Negara during the COP27 last year in Egypt, announced then. also as an initiative to assist sustainable practices to be adopted by SMEs. So can I move to the next slide? So that is what happened basically in the region in a nutshell. I tried to cover as much as possible, and in Malaysia. So what to expect in 2023, basically the coming year. So next slide. So there are 5 big directions for sustainable finance. Rise of resilient investments, rigor in SLB markets, government support, and also tipping point of transition, more sovereign issuance. So start with the rise of resilience. So basically, excuse me. So more than 2 trillion US dollars of green bonds have been issued to date. And this had outgrown certain targets, but demand far outstripping supply, so remains a key obstacle to reaching this target. So there's tremendous opportunity to tap this demand by scaling up capital flows towards investments in resilience. So this is where Climate Bonds actually has its global resilience program has been launched to identify credible science-based investment opportunities that build resilience and mobilize finance towards credible resilience measures. In terms of rigor in the SLB or sustainability-linked bonds market, so sustainability-linked bonds, like I mentioned earlier, have emerged on the sustainable finance scene in recent years after the use of proceeds of green, social, and sustainable bonds. So by the end of 2022, actually, climate bonds also recorded SLB market volumes of around 204.1 trillion, 204.1 billion US dollars. So you can see that the SLB is getting more and more popular. So I think this would continue to be an emerging and a focus instrument that could be used, that will be used by companies and also even sovereigns to transition. In terms of government support to green industry, can see that there's a lot of initiatives, incentives by sovereigns to support the green industry. So an example like the LCTF mentioned, the Low Carbon Transition Facility by Bank Negara, is to support SMEs. And then pursuant to the issuance of the SRI-linked Sukuk framework, SC actually has another so-called SRI Sukuk and Bond Grant scheme. So it's basically used to subsidize or knock down the price of the cost of external review that is involved in issuing a green social sustainability, and in this case, an SLB instrument. Transition as a focus, I think I sort of mentioned earlier. So transition finance will be a focus point, which is one of the instruments, like I mentioned earlier, was the SLBs, basically to green the hard to big sectors and align heavy industries with more global efforts towards net zero. And sovereign issuance, full steam ahead. So there's increasing number of sovereign labeled bond issuers. It has doubled, in fact, since late 2021, from 20 to right now, it has reached around 40 nations that have issued sovereign bonds, climate-aligned bonds, you can say. So this momentum is expected to continue into 2023, with India already announcing that they're going to issue green bonds, and potentially we'll see more sovereign issuing nations in the year ahead. Next slide, please. So this is a final slide from me, basically expected development in 2023 in Malaysia and ASEAN. We will see more from, I think, these 4 aspects in terms of taxonomy. So ASEAN has already issued a taxonomy, but they call it a principles-based. That's the first phase of. So there's a second phase called the plus standards. And also ASEAN the ASEAN regulators and also the financial central banks, insurance supervisors will also increase public awareness and further engagements with the financial sector. And like I mentioned earlier, Singapore, Thailand have also issued their taxonomies for public consultation and they're likely to finalize by 2023. In terms of transition, key sort of aspects would be transition finance, energy transition, alluded earlier, SLB, sustainability-linked bonds, and also potentially ASEAN will also issue the transition standards, which is outlined in their roadmap, sustainable capital market roadmap. So this is also an interesting space to watch how to bring basically have an average requirements to be adopted throughout the ASEAN member states. For disclosures, in Malaysia, I think we can see a couple of days ago, it was announced by the Prime Minister that Bursa Malaysia and London Stock Exchange Group will roll out centralized sustainability reporting platform in April, in fact, so next month. And then there's also various initiatives by, one of the initiatives by the Joint Committee on Climate Change, JC3, is to issue an ESG disclosure guide for SMEs. It has been mentioned in its press release in December. So disclosure rules are also starting to be implemented, like I said earlier, Bursa on the revised sustainability reporting framework, and also by Singapore regulators. Another interesting space to watch would be about carbon markets. So Bursa has launched its voluntary carbon markets last year, but I think earlier last week, Bursa also announced that they have signed a memorandum of collaboration with MGTC, the Malaysian Green Technology and Climate Change Corporation, to build and promote VCM ecosystem in Malaysia, following the launch of the Bursa Carbon Exchange. And also during Invest Malaysia, the government, actually the Prime Minister, also announced it's committing to a seed fund amounting to 10 million ringgit to act as an assured demand of Malaysian generated carbon credits to kickstart the market as a means to support national journey to achieve net zero emissions by as early as 2050. On regional level, so there's currently discussions by ASEAN regulators via the ASEAN Joint Sustainable Finance Working Group to have perhaps to define or pursue some initiatives on voluntary carbon markets as well. So I think that's all from my presentation. So I'll hand over back to Bobby. Yep, thank you.
Yep. Good evening to everyone. It's been a great sharing by Chi Xiang over here. I can see there's a lot of changes and movement currently. If we look into the market itself, 2 years back when we look into ESG and when we talk about ESG itself, kind of wake that we don't know where are we heading. But when we look into your presentations today, it seems like there's a lot of movement underneath it nowadays. Looking into Malaysia context itself as well as Asians. I would like the floor to pose some questions if let's say you guys have any. And we can do some sharings, and also we can do some Q&A sessions with Chi Xiang itself, with the experts over here. At the meantime, I have a few questions for you as well, Chi Xiang. I hope that it's not so challenging in terms of questions. It's also it's just more on the sharing part of it. So earlier on, you mentioned that there's this GSS plus bonds, which is a very critical ways of catalyzing such financial needs quickly, and also a portfolio of projects rather than project by project as to meet the scale of needs. Now, when we look into this, right, you state that you mentioned that in order to reach our targets, we need globally trillions. But when we talk about SEA itself, we need 200 or 300 billion that you mentioned earlier on. Now, how does this GSS bond itself work, and also how does it help from this context itself? We are talking about billions of dollars. As by looking at the numbers of billions, right? It's a huge mountain to climb in terms of for this, especially for SEA countries. So would like to understand more on how does this GSS plus bond works, and how does it help from this context?
Thanks, Bobby, for the question. So I'll try my best to answer. So in terms of the GSS bonds, I think in 2021, a record year, it was a record year basically for GSS plans issuance. with labeled debt constituted 5% of all debt issues. But in 2022, although we see a decrease in global bond volumes, in fact, the share of GSS plus issuance has remained unchanged from 2021 contribution. Basically, I think we can attribute that to strong investor appetite from the market, which offer resilience in such economic circumstances. So from climate bonds perspective, if we can share, is pushing for at least $5 trillion in green bonds alone to be issued annually from 2025 onwards. This is also part of the 5 Steps to 5 Trillion manifesto by climate bonds that has been launched recently. So I think back to the question how to, if I can allude back to how can support Malaysia, ASEAN, or even emerging markets. So it's the need to support the flow of capital, basically to the right places to address climate change. So poorer nations, not to say all ASEAN nations are poor, but generally emerging markets would need more finance to switch from dirty activities probably brown activities to green alternatives. So currently, the private capital is not doing enough, especially the West, probably in terms of the developed markets. So hence the need for more blended finance, or like I said, more private finance to be mobilized to tackle this need. So again, economic development will have to be built in mitigation from the start. So large projects should be financed through capital markets to encourage dedicated investments. Yeah, hope I answered that question, Bobby.
Yeah, I get where you're coming from. Just to extend extensions for these questions itself, because when we talk about green bonds and GSS plus bonds itself, we are talking about investments from investors to an uncharted territory, the right consider. To me, my perspective is more on uncharted territories. Now, in the sense that that involves a lot of risk, because you could involve transition risk, you could involve like things like, it didn't end up well throughout these technology investments when it comes to green tech itself as well. Now, when we talk about this, right, from this perspective itself, how does the pricing of green bonds, if we were to compare to all those pure plain vanilla bonds itself, because by looking at the risk of like engaging into green investments itself, technically we see that we will charge a higher interest rate, right, because of the risk that we involve in terms of transition risk itself. So wouldn't that cost to have a higher cost of funds for companies involved into all these green projects itself? What's your view on that in terms of pricing, and how does it help?
In terms of pricing, I would say if we take a step back to look at more of a conventional bond, so bonds may be issued with a higher price, does have a lower yield compared to outstanding debt. So the bond price will price inside its own yield curve. With a new issue concession when present in a green bond, like we said, what's the difference between a green bond and also a normal conventional bond? So with that, I think difference, so climate bonds actually termed it called a greenium or green premium. So it was a term introduced by Climate Bonds Initiative. This is also an outcome, which is, I would say, a benefit depending on of course, the bonds itself, for issuers to pay less to fund its green bond compared to its vanilla debt, if such a greenium do exist. But nevertheless, green bonds and also plain vanilla bonds are subject to the same market dynamics, such as supply, rate expectations, and geographical. But in a recent report by Climate Bonds Initiative, actually, green bonds maintain better liquidity in secondary market with better pricing dynamics as well. So this would, I would say, somehow exhibit the evidence of greenium. So in the report, I could share with you all as well. So green bonds in euro and also in US dollar perform well in the primary market and on average. So, and it's also found that green bonds achieve higher book cover and spread compression compared to vanilla equivalents on average. So these are the basically findings, I would say, from recent research and that is issued by Climate Bonds Initiative.
Okay, I mean, it's glad to hear that actually the market dynamics are also in favors of this green investing itself. Because my concern personally is more on the, whether it will increase the cost of fund because of these investments in terms of green, the green theme itself. So it's good to hear that actually the liquidity is even better, right? From your research and also understanding. Now, some exciting questions here that I have. Would you mind to share with us what are some of the local companies that actually engage into these green projects, and how do they actually reap the benefits of it?
So green issuance in Malaysia actually sort of peaked in 2019, but I don't see there's any deals in 2022, but we are actually one of the biggest issuer in the region. And in fact, one sort of fun fact to note is that Malaysia remains the only country that issues in one currency, which is in ringgit, because most of the regional neighbors actually issue in hard currencies in US dollar and so on. So energy sector would be the most financed project category in most countries in Southeast Asia, including Malaysia, with more than 50% allocations to energy sector. I think in terms of a green issue that I can straight away pull from the green or sustainable bonds, or that I can recall, one of the big one would be the PNB issuance for under the Merdeka Ventures. So they issued, PNB issued in 2017, if I'm not mistaken, basically with the proceeds from the Merdeka ASEAN Green Sukuk utilized towards financing of its Merdeka 118 tower. And remainder of the proceeds will go towards supporting activities. And also to highlight another, probably in terms of the sustainability-linked bonds that I mentioned, a recent one would be by Senviro. So basically a green firm, a company that conducts waste management activities that came to the market, totaling around, I think, $13 million US. Yeah. So those are the two sort of prominent ones, I would say, in terms of green and also sustainability-linked bond space. Of course, there's other like CIMB, Chagamas, who have also issued social and sustainable bonds. Especially CIMB and Chagamas, they issued quite a big chunk of social and sustainable bonds. Same goes to TNB and also SME Bank and so on.
Yeah, I think CIMB is also one of the banks who are actually quite aggressive in terms of promoting ESG thing itself. By looking at their, their movement and all. But we have a question from the floor, right? By Hui Jie, right? In the energy sector, what is the current demand of brown bonds relative to green bonds? The brown bonds here, what she's trying to relate is actually the transition bond itself. So are companies or sovereigns in emerging economies moving directly to green bonds, thus skipping the transition bonds? So I guess the question is more that it's more on whether are we actually ignoring the transition risk from this perspective, if I got your question correct, Vijay. Yeah.
In terms of, you said whether the current demand of transition brown bonds relative to green bonds, I think we can notice, especially from the database that climate bonds is in terms of the SLBs, sustainability-linked bonds and transition bonds, there's also increasing demands and issuance. Reason being, like I mentioned earlier, it would help companies who perhaps can't find any green assets to tag on, so they can use sustainability-linked bonds as a means of financing their transition. Because, like I mentioned, it can be used for general purposes. So how sustainability-linked bonds work is that when they issue, they would have to tag it to the so-called sustainability performance targets, or KPIs, or key performance indicators. So they have to meet certain. If they don't meet, then probably there's a step up or step down in terms of the coupon rate. So if they don't meet the SPTs, then perhaps there'll be a step up, then the cost of financing will increase, and vice versa. So are companies, sovereigns in emerging markets moving directly to green bonds? I think depends. We can see, especially in Latin America, if I could delve a bit from ASEAN, sovereigns actually start to issue sustainability-linked bonds. But in ASEAN, there's increasing sort of sub-sovereign issuers issuing sustainability-linked bonds. Sub-sovereign meaning municipal governments or even state-owned enterprise actually start doing that, especially those in hard-to-abate sectors like energy, the likes of our utility companies in the region, in Indonesia and Malaysia and so on. So I wouldn't say more towards green bonds and skipping transition or SLBs, but we can see there's emerging sort of demand on SLBs as well and transition finance instruments.
I think just wanted to add on just my personal view itself. When we talk about transitional bonds or transitional risk itself, it's very, very important for us to address when it comes to developing nations itself. Because there's a lot of huge, there's a huge risk itself when it comes to transition, when it comes to developing nations. We have done a lot of investment for developing nations where which is not so carbon friendly. So when we talk about the returns of it, or we talk about we're going to cancelling off the project and all this, that would be a huge cost for the countries, those developing nation countries. That's just something that I would like to add on, which I think all countries wouldn't ignore transition risk itself. Yeah. Any more questions from the floor? If not, I have one more for Chi Xiang. What's your view on Malaysia's current standing in sustainability actions in comparisons with other Asian countries?
Thanks, Bobby. This is a trick question. I will answer from facts. I won't try to compare. Otherwise, my stakeholders, I think, will not be happy about that. So I would say generally, some nations, the likes of Singapore and probably Malaysia, has more sort of in terms of regulation, supervision, disclosures, taxonomies. Some of the tools are already in place. But other countries in the region are also catching up. So to build up from the regulation supervision point of view, and then they have their own national taxonomies, they have their own strategy, roadmap, action plans. And also there's fiscal support from the government in providing incentives to these initiatives. So all in all, I think Southeast Asia is going towards that direction because with, like I mentioned, ASEAN regulators are also talking to each other on various platforms to advance and also bring the level up of all ASEAN member states. So as a bloc, we are moving towards a positive direction. And if I can sort of zoom in back to Malaysia per se, SC has been doing a lot of initiatives, programs in terms of capital markets, like I said, for fund management companies, for investment banks, for issuers, with the SRI bond grant scheme, incentives, and so on. Bank Negara has also done sort of introduced various initiatives for the banks and insurers and their regulators. And through the Joint Committee on Climate Change, various initiatives, cross-financial sector regulated initiatives have been introduced to scale up sustainable finance capability in the market. And also the institutional investors space, like I mentioned earlier, the Ministry of Finance and also IIC has been issuing guidelines and also code, enhanced code for the institutional investors in Malaysia. So we are pretty much there. And then with the carbon markets and so on, I think Malaysia is doing fairly well in creating a more conducive, sustainable finance market in the country. Yeah.
Well, that's a really good sharing today. I'm glad that we have you here today itself. There's a lot of insights, and also I think I'm very happy to hear that actually we as a country, Malaysia, we are actually progressing, and there's a lot of movement underneath it towards this, ESG compliance thing itself. I would like to check with the floor. Do we have any more questions so that we can tap into the experts' brain, right? to understand more in terms of the market itself and the dynamics of it as well. Any more questions? Well, I think thanks again, once again, Chi Xiang. But before we end this, I would appreciate sometimes from you guys to just stay back for a while, because if you would if you would like to know more about ESG itself, the CFA Institute actually have this certificate in terms of ESG investing. It's a new topic, and it's a very, very interesting paper in terms of how we apply ESG when it comes to investments. And this is something that I would encourage every one of you in this chat room today, to just have a look into the syllabus itself and get to know the syllabus itself, to understand it as well, so that if you guys are interested, you guys can tap into the knowledge of these sections of ESG. All right. So it's actually a qualifications created by practitioners, and it's also for practitioners. Now, this program is a very self-paced program. It requires a lot of discipline from you guys. All right. The study time is lesser compared to CFA studies. It's around 100 hours on average. There's no formal entry requirement. So the exam will last for 2 hours and 20 minutes. All right. And the pricing of it will be USD $795. All right. But it gives you a lot of knowledge. It gives you a lot of knowledge when it comes to ESG investing. The test will be conducted online. All right, you can do the test online, or you can choose to do the test in one of the test centers in Malaysia, in KL. Currently, we have over 20,000 registrations since UK launched it in 2019. And just some background of it, this program is actually launched in the UK as a start, and then eventually it was adopted globally for this CFA Institute itself. Next slide, please. So, hello. Yeah. So who are the one who's supposed to take these certificates, encouraged to take these certificates? Those who are actually portfolio managers, analysts, fund managers, investment strategies, consultants, wealth managers, all right, product development teams, and also RMs, all right. You guys might be interested into this paper as well. And then those who are actually involved in investment advisory as well, rating agency, all right. Because nowadays we talk a lot about ESG rating as well, right? We need to know the framework in terms of how we rate a company. Independent directors, financial PR, marketing teams, legal, risk, compliance, and also regulators also encouraged to take this paper. Next, please. This is just a topic breakdown. If you guys have time, you guys can go through it online as well, just to check out on the breakdowns of this topic on this paper. So as I mentioned, this is ESG for investment. It's all about investing and also portfolio management. So the theme of ESG is very, very much focused in terms of like how you allocate, how you value stocks, what you should include in your valuations model when it comes to ESG team itself. It's very interesting, as I mentioned. It's a very, very interesting topic, which is going to be add on to what you have learned so far in your CFA syllabus as well. Next, please. As I mentioned, so the course is here, $795. You can reschedule, all right. It's 100 hours of study time, and then the options was mentioned earlier. But you have a windows of 6 months. Once you registered, you have to complete the course within 6 months. And the format of the exam will be just 100 questions of multiple choice questions, and then you will get the result straight away after you complete the exam. Okay. This is how it works for the paper. So hope you guys really go through it, to understand this paper itself, and hopefully you guys register. So we end the day today. It was a really, really interesting sharing by Chi Xiang. Once again, I would like to thank Chi Xiang here. Thanks a lot. And if you guys would like to know more about this, you guys can always throw emails to the team of CFA, to our CFA teams itself as well, or and then we can direct the questions to Chi Xiang, hopefully. Or maybe we could have another new sessions in terms of like specific topics, to discuss together with Chi Xiang, our expert in the market. All right, thanks a lot. Back to Sydney. Anything else?
No, thank you, gentlemen. Okay, so we at CFA Society Malaysia would like to once again thanks Chi Xiang for his valuable time and sharing with us the insights in sustainable finance. So that's it. We have come to the very end of today's session. Please stay tuned at our social media platforms for our future events. And we thank you all as well for your time this evening. Hope to see you all again in the next event. See you and good night.
Have a great evening, guys. Have a great evening.
Thanks,
Thank
Bobby.
you. Have a good
See
nice
you.
evening.
Thanks, Chi Xiang. Bye.
Thanks, Chi
Thanks,
Xiang.
Bobby. Thanks, Sydney.